This is your technical update from the LMAX Exchange Research and Analytics Desk on this Fed day for Wednesday, October 29, 2014. Euro dollar. Key levels to watch above and below are 128.87, that's the high from the 15th of October, that's above, and then below you want to pay attention to 126.05, that's the low from the 10th of October. A break on either side really is required for the next key move, and the market is locked in the middle of this range ahead of today's later event risk. But as you can see, if we do break above 128.87, that would open the door for a more corrective move up towards the 100-day moving average in the 131.50 area. However, the overall trend continues to be on a medium-term basis quite bearish, and if we got up to the 100-day moving average, the market would be looking to put in a lower top in anticipation of a bearish resumption. Back below 126.05 would expose the yearly low at 125 from the 3rd of October and then open a fresh downside extension. Sterling dollar. Key levels to watch above and below in sterling dollar come in at 162.27 above, that's the high from the 9th of October, and 158.75 below, that's the 15th of October 2014 low. A break above 162.27 would open the door for a bit more of a correction in this market and expose 165.25 further up, that's the high from the 19th of September, while inability to break above 162.27 would keep the pressure on the downside and expose a retest and break below the early low at 158.75. Dollar yen. The overall outlook for dollar yen remains highly constructive with the trend intensely bullish. The market has in the process of recovering following a correction back towards the 105.20 area a couple of days back or several days back. A medium-term higher low is now sought out at 105.20 by that low that was set on the 15th of October ahead of a fresh upside extension back above the yearly high and multi-year high at 110.10, which comes in from the 1st of October. A break above 110.10 would open the door for a bullish continuation towards the 115 to 120 area. Ultimately, any setbacks in this trend are expected to be limited to the 105 area. Only below 105 would compromise the current outlook. Euro Swiss. Euro Swiss has been consolidating over the past several days, with the market trading just over the yearly low at 120.45 from September. A break below 120.45 would open the immediate retest of 120, a major psychological barrier, while a break back above 121.40, the high from the 7th of October, would be required to take the pressure off of the downside. Aussie dollar. Aussie dollar is looking to break higher after consolidating for several sessions. However, any move above 89 would still be classified as corrective on a medium-term basis, with the market seen well capped towards the 100 and 200-day moving averages, which converge around the 91.50 area. Inability to close above 89, that's the high and the recent range high and the high from the 9th of October, would keep the immediate pressure on the downside, exposing a retest of the yearly low from the 3rd of October at 86.42. A break below 86.42 would then open a fresh downside extension and bearish continuation. Dollar CAD. Dollar CAD is in the process of correcting lower following a break to fresh yearly highs on the 15th of October at 1386. Setbacks should, however, and are expected to be limited to the 1080 area, with only a break back below this previous higher low at 1080 from the 9th of October to compromise the current outlook and open the door potentially for some more corrective declines. However, while the market holds above 1080, the outlook remains constructive and the market should look to put in a higher low in favor of a fresh upside extension back above the yearly high at 1386 and towards 115 further up. Kiwi dollar. Kiwi has been locked in a consolidation since basing out by yearly lows back on the 29th of September at 77.07. The market has been capped to the top side at 80.35. That's the high from the 21st of October. A break above 80.35 would open the door for a more significant correction within a broader underlying downtrend towards the 100-day moving average, which comes in roughly around the 83.50 area. Inability to establish above 80.35 would keep the immediate pressure on the downside and the bearish consolidation intact in favor of an eventual retest and break below the yearly low from the 29th of September at 77.07, exposing deeper setbacks towards the 74 to 7500 area. SPX 500. The market continues to trade within an intense bullish with intense bullish momentum following the correction and a breakdown below some critical rising multi-week, multi-month trendline support and the 100-day moving average, all the way down to 1820 to the 1820 area back on the 15th of October. It continues the intense recovery, trading back above that previous support, now turned resistance, and now once again support, and potentially threatening a retest of the record highs from the 19th of September up above just over 2020. For now, the market would need to break back below 1963 to take the immediate pressure off the top side, while ultimately a break and close below 1950 would really be required to open the door for a potential and suggest a potential lower top below the record low and a potential bearish resumption. However, while the market trades above 1963, the focus continues to be on that record high and the possibility for a retest. And gold. The gold market really has nothing new going on. The market has been locked within a multi-week, multi-month consolidation and a range trade in that for the past several months, with the market being well supported down around 1180. That's the 2013 base, recently bouncing up off that base, just falling just shy down to the 1182 area ahead of this latest minor bounce. Until the market breaks below 1180, the range trade is intact, and there is a possibility that gold trades higher back into the range and towards maybe the lower end of the upper range above 1300 into the 1335 to 1350 area. That's all for today from the LMAX Exchange Research and Analytics Desk. Wish everybody a good one, and see you back on again tomorrow.